Hey, welcome, everybody. I'm Rosalie. I'm from Panoptic. I do marketing at Panoptic. I'm joined here by Nathan from Panoptic, Dan from Tasty Crypto, and Kevin from Hawk. This is the first edition of our The Futures of Derivatives podcast, where we're just going to be inviting some thought leaders and people in DeFi to come on our podcast, talk about the latest trends, and have fun and chit chat a little bit. So, Dan and Kevin, thank you so much for taking the time to be here with us today. Feel free to introduce yourselves, and we can get started.
Sure.
Hey,
Dan, you
what's
want to
going
go first?
on? Yeah, I'll go first. Hey, Rosalie, Nathan, Kevin, it's great to be here. My name's Dan. I'm the head of growth for Tasty Crypto. And Tasty Crypto is the crypto business for US based brokerage Tasty Trade. So we are a boutique options firm that does basically provides brokerage services for a number of assets like Forex, equities, ETFs, and our futures. So I head up the crypto business over here and head growth. So I do a bunch of content, a bunch of live streams, and yeah, I'm excited to talk about this because I think as we'll probably get into, options has sort of been overlooked. Like DeFi options has sort of been overlooked, and I think there's a lot of great builders in the space, and it's something that's going to become popular over the next couple of years.
Awesome. Hi, I'm Kevin. I was actually on the podcast maybe a couple of months ago, right? I'm the head of research at POC Protocol. We're a DeFi options trading protocol, and what we've done is gamified options trading in crypto, and trying to kind of widen distribution in that sense. And maybe some of the things we'll talk about in the future. Well, a bit later on this podcast, that options is a little bit complex for everyone, especially just for the crypto normies, and how can we onboard more people into this side of derivatives.
Yeah, I think that's definitely a hot topic right now. Nathan, do you want to introduce yourself as well?
Yeah, I'm Nathan. I'm a research analyst at Panoptic, and yeah, just happy to get this podcast going. Like I said, or mentioned internally at Panoptic, we're bringing Rogan on chain as far as derivatives go. So, really excited to delve into this niche and really hope to explore the evolution within the space, because now is a really critical time, especially given the events of the last month.
Yeah, definitely. There's so much been going on with lots of price movement. I think ETH is not doing that well, and some scandals that have recently been happening where people have lost millions of dollars due to poor management. And so there's a lot going on. I think why haven't options really taken off yet? They did in TradFi with structured products and Robinhood, and in DeFi, we see everybody using perps. I feel like there's a new perp protocol coming out every week. And yeah, I don't know if it's just kind of an excuse that people say like options haven't taken off yet because of perps. Maybe that's just kind of an excuse. Maybe we need to really just analyze why they haven't and figure out a solution. So what are your thoughts on that?
Kevin, you can take that to start.
All right, sure thing. Yeah, I mean, as I mentioned a couple minutes ago, options has always been seen as a more complex derivatives product. Perps is very easy to get your head around, in the sense of, hey, you just long or short, right? And then maybe you got funding rates, but that's not really that complex to understand, right? So especially when you're looking at, let's say, meme coin trading or the lower cap trading markets, it's very easy to create a perps market. It's not that complex, right? But when you're looking at creating an options market, you need quite a lot of liquidity, and much more variation in the interest of participants, because the interest of a buyer of an option is very, very different to the interest of a seller of an option, right? So let's say for very low liquidity altcoins, you might see a lot of buyers of options, but you might not see that many sellers, or, well, we can assume, right? So it's this very big discrepancy, I would say. I think the interest in options is growing, definitely. I just saw some data from the block, and actually last month was the biggest month for options open interest for Bitcoin ever, right? So it is growing, but I think for us to look at the DeFi side, we don't really care as much about Bitcoin and Ethereum, right? I mean, even with PocPoc, we're doing Bitcoin and Ethereum. But how can we expand the space more around altcoins as well, right? How can we onboard altcoins, or how can we make it much more than just trading blue chip assets?
Yeah, and I think that there's a lot there, Kevin, and I can certainly frame it from the traditional finance side, since my company is a leader in options trading for traditional assets. And I think when you take a look at what options are, they're pretty complex derivative products. So you need a lot of liquidity, you need access, you need good user interface, and I think um, although the space has come a long way, DeFi is still very confusing to normal people. Um, it's not intuitive to get certain things on chain, right? There's a lot of friction there. So what Robinhood, what Tasty Trade, what some of these other traditional brokers did for internet, online trading and giving access to these products to individual investors, I think we've yet to see that sort of happen for DeFi in general. So once you add on stuff like options where there's multiple strikes, there's expirations, there's volatility, there's complex pricing models, I think it's hard for that product to break out and reach the masses. So I think it's going to take a little bit of time. I think it's an important aspect of um, what good functioning markets, market structure in general, because I think over the last couple of cycles with, these higher levered per products, futures, you see very volatile days, very volatile swings, inefficiencies. People get kind of, liquidated pretty quickly. And I think options can mitigate that when used properly. So, I would point to Coinbase's acquisition of Deribit to sort of be that signal that I think, it's coming, right? And I know that's a centralized entity, and Deribit was a centralized order book. But to Kevin's point, I think it's hard to build options on chain. And I know Panoptic's doing it. I think PocPoc is a great, the gamification, making it a game is a really interesting way to approach it. But I still think like the DeFi infrastructure needs to be built and the liquidity needs to be supported. Because on the other side of just like buying a bunch of calls or buying a bunch of puts, you need market makers, you need liquidity. And right now, I think for options on chain, that just doesn't exist, right? So maybe we'll get there, and maybe it's the perpetual product that Panoptic has, that'll get adopted. But I think there's still a big gap between what traditional traders in traditional markets want and what we have in DeFi. So, yeah.
Yeah, I
Um,
agree.
oh, sorry to interrupt. I was just gonna, so we've heard it framed from both the liquidity side and the product side or the infrastructure side in terms of having that sort of universal UI UX experience. But how much of it do you think is like a narrative framing problem? Because at Panoptic, kind of explored how crypto in its vol is sort of like a standalone asset class. Like I've even heard Don Wilson, the founder of the famous trading firm DRW, go into how BTC as just a product, as an asset, kind of has its own intrinsic negative convexity. So crypto in and of itself, be it BTC and ETH, and much less the altcoins, kind of precipitate their own massive feedback loops that you can just feed off of in vol trading. Do you think that needs to be advertised more to retail users on chain as to how it's sort of like a meta trading paradigm? Because perps and spot trading, you can capitalize on those underlying swings, but uh, in a more directional lens, whereas with vol trading, you can just look at the swings, it's directionless. It's just massive swings up or down. And really, crypto has these raw ingredients already embedded within the asset class to where um, it's primed for great volatility trading. I just don't think that's being communicated enough. That's my personal opinion. How much do you guys think that that needs to be blasted into the ether or so?
Well, I think to your point, Nathan, the setup is there, right? Like I think we don't have an absence of volatility in this space, right? I think you can, I think the space is very volatile. Most indicators will show that even on Bitcoin, even though Bitcoin vol has come down over the years, um, there's thousands of other long tail tokens that you could
Yeah,
speculate on from volatility. I just hold firm that it might be a narrative thing, but it's a usability thing. I don't think that there's access to this for the traditional trader. And I know I'm based in the States. Our company has to follow US based trading regulations. There's so much to trade on the traditional side, 0 day to expiration options, VIX, right? Everybody loves trading the VIX, following the VIX as a volatility gauge. Hey, I can trade IBIT options, right? So I'll give you an example. At Tasty Trade, our largest revenue driver for options is IBIT options. So options on the Bitcoin ETF. So users will trade this, but it's accessible. It's the most liquid ETF. It's it's grown the fastest, and it's familiar, right? It's something where people can easily trade. They got a brokerage account. Oh, Bitcoin is super volatile. I'll trade the options on the ETF. So I think it's an accessibility problem. I don't think it's a narrative problem, because I don't think we have an issue with saying that crypto is volatile. I think anybody can agree with that. So it's just access, right? I point to stuff like the BVIV, Volmex. I don't know if you're familiar with Volmex, but the guys over there, they launched essentially a crypto VIX index, and it's tradable on chain right now on some smaller perp exchanges, but they just did a licensing deal for data with the London Stock Exchange. I think we're moving toward that, right? I think you can look at like Deribit and what they did with Coinbase, like I mentioned before, but there's also an issue with sizing, right? So I think Deribit options, if you were to get access to that, it's the pretty big size. The contract sizes are pretty big, right? The what you have to post is pretty big. The premiums you have to pay is pretty big, because you're taking sort of like a full swing at a Bitcoin, right? As opposed to maybe like micro options or something else, right? So again, I think the key thing here is the accessibility to most people. I don't think these products are as accessible. I think if they were, people would trade them because the volatility is there, right? So that's kind of what I see. And I can even point to the CME futures, right? So Chicago Mercantile Exchange, they offer full-size Bitcoin, full-size ETH futures. We don't see a lot of trading in that. And I don't know if it's a liquidity thing. I don't know if it's just like retail wants to trade other products, but I also think it's a size thing. I think those contracts are really big. I don't think people necessarily understand the market that well. And they've introduced the micro ones and stuff like that. But yeah, I think it hasn't caught on yet because crypto UX isn't that good, right? It's just not
Oh,
that
no,
good,
no. And I completely appreciate that perspective. It was more so like, I guess what I was getting at more so, yeah, of course, everyone realizes crypto's volatile. It's more so like about the intrinsic qualities of, like, say, Deribit as an example. Now, maybe this has been altered with Coinbase since Coinbase has acquired them, but for a long, long time, Deribit only accepted BTC and ETH deposits. So that would create this amplification mechanism, like if in these volatile underlying conditions, that's only going to be magnified more so by the fact, okay, you're going to be margin called in your underlying tokens. And to the flip side, like when token prices are going down, and to the flip side, when token prices are going up, if you're short. So I think the largest crypto options exchange in the world having that just adds fuel to the fire necessarily. I think that's where and maybe that's what Don Wilson meant as well, saying that like there's already this embedded negative convexity within the like BTC. You layer that on top of it with the world's largest crypto options exchange, that I think helps fuel these price movements that vol traders can take advantage of. So it's more of like these unique niche aspects. You're 100% right as far as the accessibility, but how much do you think, going further into that point, um, how much of that do you think is just the engineering aspects to date or the regulatory aspects? Because I think we're making some headway on that front in the US. Or do you think it's a combination of the two?
Yeah, I think it's a combination of the two, right? I think there's still a little bit of it's unclear what you can do in crypto in the States as a traditionally regulated broker, right? And all of these companies, including mine, crypto does not make up that large of a spot crypto and DeFi and some of these products that we're familiar with. It doesn't make up that large of a segment of the revenue. So to take a bet on that and say we're going to be the first to do this or we're going to expand that, it's tough because you have to deal with your compliance departments. You have to deal with finding engineers that are familiar with building on these protocols. You have to put marketing spend behind it. And I think when you don't have that regulatory clarity and there's a chance that something could flip and you get sued, or God forbid someone loses, customers lose their money. I think it's too big of a risk for these traditional firms to take. So I guess to your point, Nathan, and I appreciate like that commentary. And I didn't see Don Wilson's quote, but I'll definitely take a look after. But I think with Coinbase acquiring Deribit and adding maybe the ability to do dollar denominated options and simplifying it, that's the kind of accessibility I'm talking about, because it'll just be on a platform, and from there, maybe we can, other companies can build on top of it, or applications can be built there. So, yeah, I don't know. Like I think, and I want to hear Kevin's comment, but I'll say this with like the idea of volatility and some of that is, the VIX index, I think the story is, I'm in Chicago, so I think the story is that there was an embedded arbitrage between the VIX futures and the VIX like options on the VIX index. And I don't know too much of the details, but that trade, because they set it up that way, because there was this like always this arbitrage or this implied, whatever, there was always a trade there to be made. That's what kind of kickstarted the whole volatility craze, right? So I think when I say accessibility, it's not just applications or user experience. It's like simplifying down the opportunity and allowing people to express that view easily. So I don't know if that's like an arbitrage trade or like a carry trade or whatever, but usually there's like something where traders are gonna 9 times out of 10, they can take a position and it'll revert to the mean or whatever. And making that accessible is kind of what I mean as well. So sorry, Kevin, I'd like to hear from you as well.
No worries, Dan. Actually, I'd like to add a little bit to your point. I mean, there's so many opportunities in options, right? And we have the flexibility in DeFi to really create products which build on to existing
Uh-oh.
Oh no, it's just getting interesting.
I know. We lost Kevin.
But
Little
yeah,
technical difficulties on our end, so just bear with us. I think I'm curious as well. I think there's a lot of yield farming opportunities in crypto, and people are very familiar with yield farming, but they don't seem to be so familiar with volatility and harvesting volatility. And so I think maybe figuring out how to bridge that gap is something we should also maybe be focused on. But glad you're back, Kevin.
Thank you. Sorry, I'm not sure what happened. Yeah, so I was just saying we have the flexibility in DeFi to really build on existing infrastructure. So let's say if Panoptic is building options infrastructure using liquidity pools, we can allow other protocols to build on top of that. Maybe we can have stablecoin yield funds to just create DeFi vaults, which take specific positionings in the markets, and that just creates an opportunity for people to express their views, as Dan said, right? So let's say if there is a specific vol trade to be taken, people in crypto don't need to understand how to take this trade, right? It's just like a vault, or it's just expressed as a combo trade, which they can just click deposit and then just trade it, right? I mean, Deribit has kind of done that in some sense with combo options, but I don't think it's as abstracted enough to really make it accessible for everyone, and that's why we still see just perps dominating everything, because the actual directionality or the actual exposure in an options trade or in a combo trade is unclear for most people, and people don't really want to read a book to understand how it works, right? Like people just want to make some money, right? But I think what we have started to see, and this is maybe on the altcoin end, is sort of like perp-like, option-like products where you can, like, let's say 1000x leverage some altcoin without liquidation, right? Which sounds eerily similar to options. I don't think it is options, but it's sort of allowing you to take a similar kind of trade, and it's very easy to understand, right? You're just longing something. There's no liquidation in some way. I'm not 100% sure about the details on that infrastructure, but it's very accessible, right? You just long and that's it, right? So if we can make these products abstracted, and this is what we're trying to work on with PocPoc, people don't need to think about it too much, right? And people have clear benefits. So let's say a good idea of just trading vol is just using products like straddles, right? You can just rebrand those into, instead of saying long vol and then having like some crazy different like Greeks shown for the product, just completely abstracted and just say, hey, you're trading the price of Bitcoin or an altcoin moving up very rapidly or moving down very rapidly, and that's kind of it, right? And also, to speak from the regulatory perspective, which Dan mentioned, I'm based in the UK, and I would say that the regulations are much more strict than they are in the US at the moment. Maybe the UK represents the rest of the world in terms of regulations, aside from Europe and the US. it does prevent a lot of the institutional liquidity to come in. And I think one of the big things for options to take over a bit more alongside perps is having these big backings from market makers. If everyone wants to buy options and selling options is too complex for people, they need a market maker to actually sell them the option, right? Same vice versa. So I think what we need is some kind of coordination between institutions and DeFi startups to really push this market making perspective and pitch it to them.
But what about people who are familiar with LPing? I mean, people LP on Uniswap, and they are all selling options, and so that liquidity is there. It's from retail. I mean, sure, it's also from big holders, whales, and market makers, but people are already selling options. They just, I don't know, they don't seem to really fully understand it. But how could we translate that LP liquidity into being used as from an option selling perspective?
To tie into what Rosalie just asked, like with the DeFi options having yet to gain a huge amount of traction, how do you see that eventually playing out on chain? Like, do you think it'll ultimately be CLOB based, order book based, or AMM based? Yeah, to both of you.
I want to go to Rosalie's point, and then I'll get to yours, Nathan.
Yeah.
So I've done a lot of LPing to some varying degrees of success. I actually was farming Meteora on Solana pretty heavily. I've set up my own DLMMs. Like, I think to your point, there is options like products there with LP, and there's options like payoffs, and it kind of resembles that product. The thing that always confused me, and I'm not a quant, I'm more of just like a regular kind of crypto guy, is I could never track my impermanent loss. I could never, like, these interfaces never showed me like what was I risking. Like I could do it on my own, but should I have held the position instead of LPing? Should I, what's at risk? Is if the market moves up 5%, how much am I losing by not just being in spot? And I wonder if there is some complementary product, and that's sort of like your niche to focus on to get this adoption, is like providing LPers some type of way to hedge or some type of way to like lock in a profit, right? Because there's different ways to use LPs, right? You can use LPs to just generate fees on stable pools. You can use LPing to sort of limit order out. I call it like limit order out, like almost like sell a covered call. If you're in some meme coin and you get in early and it shoots up, you can actually provide liquidity and sell out of that into whatever your base pair is. So I've used it that way as like this synthetic limit order, covered call selling. And the thing that I've never quite grasped yet is like, what's my P&L in those pools? Like, was it a good decision to LP? How long should I keep that position on? And I wonder if there is like a way to hedge impermanent loss or show LPers that and make it a little bit more profitable or a little bit more attractive. So that's where my mind immediately gone, because I've LP'd myself. And I've always been confused. I'm like, I don't know what profit I made. I don't know if I lost something. Like, I don't even really know what my impermanent loss is. Like, I'm just not that sophisticated. And I think I represent a lot of retail traders, crypto retail traders. And, to your point, Nathan, you were mentioning, can you
Yeah. I was just tying it back in because Rosalie mentioned LPing, it immediately goes to AMM trading on
Right.
AMM. With the options problem on chain yet to gain traction, do you see the eventual solution, like whatever options protocol breaks through, do you see it being AMM powered or CLOB powered, or both based?
I think it depends. Like, I think what Derive worked on, I think they might have, I don't know if they did a collab. I think they were originally an AMM and then moved to a collab.
They did
I
AMM
think,
initially.
and then, I always think it's probably a club if you're just doing like standardized traditional looking options. I think Pock is really interesting. I'll admit, Kevin, I just took a look at the product this morning, but I love gamification. I love like onboarding people through games. I think it's a great idea. And I think those types of products lend itself a lot of like AMMs on the back end and this like DeFi mullet approach, or like which is something an idea I love, where it's like abstract away the whole thing, make it fun, show people what you're earning, show your profit, show your risk. And then, maybe on the back end, it is an AMM that Pock's running or plugging into or something. So there's probably a combination of it. It just depends on what you're trying to do. But yeah, Kevin, I'd like to kind of hear from you.
Yep, awesome. So personally, I mean, I haven't done a crazy amount of research, let's say with Panoptic using AMMs for options trading, but I feel like it adds on an extra layer of understanding that you need to do before you can get into options trading on crypto. So I still think that, especially again, looping back towards bringing on liquidity or institutions to come on, I still think that it'll be easier to use an order book than it is to have an AMM, and of course abstracting it from both sides, from the consumer and the actual liquidity provider or any partners that you're going to use. For us at PocPoc, at the moment with our current products, it's very much well, behind the scenes, it's an order book, but at the moment you can only get at the money options. So it's very, very abstracted in the sense that you don't need to think about what strike you're using or anything like that. Our first step was, hey, how can you take advantage of the leverage and sort of the time-based properties of options, not having to think about any of the Greeks or strikes or selling options. You're just buying options. And then we introduced spreads. We introduced digitals as well. So 1 day to expiry. And then actually the initial product we made was pay-as-you-go options, which is something we introduced, which is essentially where you're splitting your premium across, let's say, like 3 or 4 different periods. So let's say if you had a 7-day option, you would pay maybe a quarter of the premium, or let's say a third of the premium, and then after 1 or 2 days you would pay another third, and so on. And it's the way we gamify it is like you're feeding a chicken, right? So that unique kind of maybe a variation of an options product that we introduced made it very interesting. So it acts almost as a stop loss for an option. So if you didn't want your option anymore, you don't have to pay for the full premium. You just stop feeding your chicken, essentially. So I think sort of these kind of variations, and I mean, the big meta in DeFi is definitely yield farming. So the more we can abstract out of everything and the more we can focus on yields, and as Dan said, just know how much are you making, how much are you risking, make it very, very, very clear. Then I think that's the way we'll push options further.
Yeah, I definitely agree. I think gamification is really interesting, and kind of vaults structured product like products, but there will always be this risk, right? So like, let's say you have a covered call structured product, then there is more risk. You are harvesting volatility, but of course, there's a lot of risk depending on what the price does, and we're not able to predict that or kind of manipulate these models as quickly. So sometimes there will be a lot of loss there, and people aren't necessarily prepared for that, or they just prefer not to lose any money. But in the real world, it's sometimes you lose money. It's just you can't always make money, and so I'm curious to see how you're kind of facing these challenges with greedy users who are kind of used to gambling and winning and don't really understand the math. And how does that affect how you build your product? How are you kind of changing that? I know at Panoptic we started with kind of building options for retail, and we had our show and we were teaching lots of educational content, and the people who care about these things, they were interested. At the end of the day, most people prefer to click a button and to make money. And so vaults are definitely kind of what we're building now, and we're focused on creating simpler products that give you these metrics and that are easy to understand. But at the same time, they're so complex. So like, how do you kind of take both into account to create the perfect product? And I know Dan, and you're working with option traders as well. And like, what has been the sentiment? How has your product evolved and changed over time?
Yeah, so what we do really well here at Tasty is we basically take like, I'll give an analogy. We take like the equivalent of instant mac and cheese, and we make people like they can read the instructions and make mac and cheese, and we make them think that they're like a chef, right? So to translate that to like what we do with options is our platform makes it very easy to see what you're risking, what your potential upside is, what your probability of profit is, and then it's one click to execute that. And obviously on the back end, we've tapped into, there's the liquidity there to do that. So, you can do, we center around a lot of premium selling too. Like we don't tell people to go out and like buy calls or, get long delta, or, it's very much around high probability, small trading, like high probability profit, small trading, which is really like premium selling spreads, selling, butterflies, stuff like that. 0 day to expiration is pretty popular with the more speculative crowd, but our content and what we do centers around like the live trading in the markets, what to look at, how to size a position, what your payoff might look like, and then that's kind of how we create content around that, so people feel like they understand what's going on and they feel like they're going to win. So yeah, that's sort of like we have a media network that basically does that all day. So yeah.
That makes sense. Yeah. And then at PokPok with gamification, do you think there are many users who are just kind of like playing this game and making money, or do you think that they are interested in options and it's just an easier way of communicating this, or is it kind of like just a whole different product in itself?
Um, I think that we've tried to take it from an educational perspective. Okay, like how can we teach people about options? Maybe PokPok will be the first exposure they have with options. And what we've realized is that we have to ask ourselves, do people really care about learning about options, or do people just see this as a new way of leveraging and clicking a buy or sell button, right? And sure, I mean, majority of crypto is made up of these speculative, like degen traders, right? So people want it to be as simple as possible. So I would say for us, it has been just trying to abstract it as much as possible. The education side, there is an interest in people trying to learn, but really people just want to speculate, right? And I've been leading the trading newsletter with PokPok, PokPok Pulse, and again, the focus has definitely been shifting from just education to, hey, how can we trade better? How can we position ourselves in the market? What options trades might be good at the moment? I'm not sure if that answers your question, Rosalie.
Yeah, definitely. It does. That brings up like another interesting topic we wanted to dive into as well is all these metrics that people are using in TradFi. And same with us, we used to get a lot of questions like that as well as users progressed in their journey and then they understand what they're doing. They're like, okay, well, if I expect the price to go here, what is the best strategy for that? And how do I position myself
Yeah.
for volatility or deltas or gammas? There's all these metrics. And so yeah, I'm curious to see kind of what you guys have seen people use in TradFi, whether that's volatility metrics or kind of like looking at the price of Bitcoin in terms of the dollar or gold or comparing to the NASDAQ, kind of just these spot vol metrics and if they necessarily apply to crypto. And maybe there are different metrics we should be using in crypto to better price volatility and the assets itself and educate people better on what is the best move for your prediction.
Yeah, I mean, I'll just kind of echo what Kevin said. Really, what we do is we educate on the complexities of these products, right? So you start off and you're like, you know, we do education. We have a whole marketing team and content team that does that stuff and posts it on our platform. But it's like, you know, what is a call? How is a call priced? What does delta mean? What does gamma mean? What does vega mean? How do you use those to how do they go into the price of the option? And then, you know, we have like analyze tabs, and the analyze tab shows you the payoff, right? We basically create a picture for you and show you the payoff, and that's what I used to learn. I would always look and see what like the payoff graph looked like on certain positions, and then, you know, we display stuff like probability of profit, like I mentioned before. The one thing that that we do is we use implied volatility and implied volatility rank, and we show how that implied volatility sort of how that prices the option or how that goes into the price of the option. And then, you know, you can track realized volatility against it. So I like those, it really comes back to IV, right? I think like you can kind of like center around that, the implied vol and even when we do analysis on Bitcoin, we show what the implied vol with the like price, what that means for the price range. So we only offer spot trading on Bitcoin, but you know, based on the implied vol calculation, you could say like Bitcoin is going to trade in this range, and people can kind of determine, you know, where they think it might go. So I think it's like all about simplifying these concepts down to I don't want to say one number, but kind of like one number that people can buy into. And I think for us, that's always been like, how do you read implied vol versus realized vol, and like, you know, what does that do to the price of the option? You know, whether or not you're taking a directional view or you're neutral or whatever. So I do think, like to Kevin's point, it's education, and there is an audience for this out there, right? There you know, everybody will trade options once they understand it. I think at least try it, right? So I do think that there's an education component to it, and you know, I don't know. I'm very much a believer in like familiar, better, new. Don't reinvent the wheel. You know, if you're trying to go after retail options traders that are familiar with, you know, these concepts, make it easy for them to apply it to crypto, Bitcoin, ETH, whatever. Introduce something better. Could be a game, could be the AMM vaults that Panoptic does, could be a spin on, you know, helping LPers hedge their impermanent loss, and then introduce something new. Could be a different metric, like you mentioned, Rosalie, that somebody came up with that now is like an indicator people use or a pricing model people use. But I always stick with like familiar, better, new. So that usually works.
Well, also going along with what Rosalie said, do you think the focus on macro indicators within crypto has grown within the last few years or decreased? Like this year, a big narrative has been BTC versus gold. and gold has outperformed BTC relatively speaking this year, as well as like the FOMC impact in the aftermath of announcements. The the focus on like the debasement trade. How would you say that goes along with your commentary, Tasty's commentary, and as well as like the Pock Pulse for Kevin?
You take that, Kevin, and then I'll jump in.
Okay, so let's say just looking at Pock Pulse, following on from Dan, we've looked at kind of spreads between realized and implied volatility as well, and kind of just explaining to people how they might be able to take a directional trade, or how they might be able to not necessarily take a trade, but have a feel for the market. Then again, macro would be a big thing to look at. For example, looking at economic reports and trying to understand what kind of drives the overall market. But we haven't really looked at, let's say, Bitcoin against gold or anything like that. But maybe we'll look at Bitcoin against the SP 500, or looking at the impacts of the VIX based on, let's say, Trump tariffs, or let's say the recent volatility around China and the US, kind of like mini trade war, which they were sorting out a few days ago. So all of this kind of stuff, and trying to express it in an options form of, hey, this is what's happening with volatility. This is, let's say, in the time frame of the next few weeks or the next few months. This is how we can consider the market, right? But instead of just looking at all of these different metrics and kind of the interplay between different factors, we have to kind of go back on what we're saying and say, we have to question whether there is a correlation between everything. So let's say the most obvious one is, let's say, Bitcoin and gold. We have to question, is there really a correlation between these two, or between Bitcoin or crypto and equities? I mean, the markets are completely different. For example, the actual move in liquidity is completely different. Crypto has its own liquidity cycle as well, right? And then we've got the global liquidity cycle as well. So there's a lot to kind of think about, and it's not unique to options trading, but I think when looking at education for trading, volatility is a very important aspect, and people don't really care about it as much in perps. They care about it more in options, right? Because there's so much more you can do. You can just take a directional trade, or you can just long vol or short vol, or you could do some kind of spread trade.
Yeah, and just kind of to echo what Kevin said, is at Tasty we have a whole research team that sort of analyzes these different asset classes. So there's a commodities team, there's a forex team, we have macro analysts, and I think we have to recognize that as much as crypto has grown, it's still the smallest asset class in the world, one of the smallest asset classes in the world. So to Kevin's point, like global liquidity matters, like what macroeconomic factors are doing plays into these cycles. So you need to be aware of it. Specifically on like the gold Bitcoin correlation, I've paid attention to that a little bit, and I've done a little bit of that over here at Tasty, where I've just kind of shown that gold has outperformed Bitcoin, and that's due to global inflation and some other just basic macro sort of concepts. And the fact that it has diverged from Bitcoin is interesting in the sense that, like, should Bitcoin be catching up, or why has that happened? And I think, to Kevin's point, with options you can express that, right? You can express a view on that. You can use options to maybe take a view on whether or not that's true. Whereas perps, I don't necessarily think people think about that as much. Maybe there's like a pairs trade you can do, but options in particular, I think you can kind of use that and see like, okay, well, Bitcoin's, volatility has been down. Maybe like options are cheap right now because the vol's down compared to gold. And, I expect Bitcoin to catch up to gold, or, I expect gold to come back down to Bitcoin, that correlation. So maybe I, do something there. So I think those things matter. I think you have to be aware of them in crypto, right? Like we get so caught up in sort of like these like narrative driven hype cycles around like, I don't know, like meme coins, what I call like long tail assets, that we forget, what's driving, what bigger world macro views are driving this. Because it's still a very small asset class. Not very many people participate as much as we do. So yeah, I mean, I think that those things are interesting. And I go back to what I was trying to mention earlier is like people say like people want to be educated and they want to engage in some of that. And they certainly want to feel like they're smart and know what they're doing. But more than anything, like people want to feel like they're going to make money. And so like that's why perps are so interesting, is because it's very simple. You don't have to manage expirations or like big contract sizes or margin. You're you look at like, do I think this is going to go up or do I think this is going to go down? And I want, and then you give people leverage, and it's like it just plays into that gambling mentality that I think people start off with when they get into the space. So I think that there's a way to reach an audience that has taken a step further away from that gambling instinct to really want to understand smart, calculated risk. And I think that's where options come in.
How
Yeah.
far away do you think? Oh, sorry, Rosalie. I was just going to say, like, going back to her prior question between like the retail and the institutional audiences, like, of course, there are regulatory barriers with the institutional crowds, and they don't need as much education. But how do you think you strike a balance between appealing to either one? Like gamification, of course, applies more to the retail side, but looking at these types of indicators, I think more so appeals to the institutional side. So it's like, how do you thread the proverbial needle to where you can get, because really that's the inflection point for all of us, right? Within crypto, once the institutions are able to flood the market, that's really when crypto will be taken seriously. I mean, it's already taken seriously as an asset class, I would say, but really that's when we're going to see, I think, real maturation. So it's like, how do you appeal to both simultaneously, I guess?
Yeah,
That's a question for either one of you.
we're a retail firm. So really we're just focused on the individual investor and how we can make it easy for them to access these markets. I call it pro-tail. I think that there's a large segment of people out there that fit into this pro-tail class, which is like professional retail. So it's like people that have pretty big accounts, but they're self-directed. I think that that's an opportunity. I think that they are very open to crypto, and they definitely want these products, right? So I think we're close. These, like I said, we're traditional assets first. So, as much as I'd love to, we're not going to be the leaders into this space. We're always going to kind of like piggyback off of what the Coinbases, Krakens, and some of these other crypto first firms are going to do. But I would say we're pretty close, given that Coinbase acquired Deribit and are going to open and also do have perps. Coinbase does have US listed perps. Not as big as like the Hyperliquids and what we're familiar with, but they do offer that now. So I think, Nathan, we're pretty close. And it's a matter of time before my firm catches on. Robinhood obviously will be there very soon. But I would say like that pro tail segment is very, very prime to be accessing something like this.
Yep, I think for us at PocPoc, we've definitely started off like the very simplified retail approach. So it's kind of like a distribution problem. You take the most immediate liquidity which is available to you. So for us, it's just normal retail. Similarly for Panoptic as well. Well, as Dan said, like more like pro tail, right? People who are a bit more knowledgeable. But then kind of in order to skyrocket options trading, you need institutions, right? So the easiest way to go about it is first you take the retail traders and you pitch it to them in a way, right? Then you pitch it to maybe the more crypto first hedge funds, asset management funds, and who knows, maybe you create different products, a different product range for them. I mean, Panoptic is very flexible in that sense. For PocPoc, since we're very gamified, we might have to create, let's say, different products to target that sort of market, right? And then after that, you go to non-crypto firms, and something which, let's say, Deribit would be very capable of doing is just go straight to the institutions and pitch why crypto options trading is profitable for them, and that's how they start to suck in liquidity slowly, little by little. So I think it's just about maybe convincing one or two of these firms, and then the rest will start to kick in. But I don't think it's as much of, let's say, us as builders in the crypto space. We don't need to put in crazy amount of effort, because I would say we're still pretty early. Institutions, let's say like JP Morgan, they're still focused on the tech side of crypto, and building more, let's say, technical infrastructure. Maybe they're building a little bit on DeFi, but they're not as much taking directional exposure or actually putting on their asset management side to do so. A few weeks ago, I went to the London blockchain conference and actually met a guy from JP Morgan from their asset management division. And I asked him a little bit. I was like, "Hey, what's the scene there at JP Morgan, right?" And he said that he thinks it'll still take another around 5 years or so before these big firms like JP Morgan start dipping their toes into actual like exposure in terms of trading, right? But yeah, I mean, they're all doing options trading, and it's a crazy, massive market in TradFi. But I think we just need a little bit more time, and over time, our products will evolve. And by then, they just need to be ready for institutional consumption. I think that's all we can do for now.
Yeah.
I'm glad you mentioned that, because that's kind of the utopian world for all of us, like JP Morgan specifically. Like my ideal world are the Goldman Sachs, the Morgan Stanleys, the JP Morgans, trading perps, trading perpetual options. And I think that, like in my mind, that's why I asked about the maturation of the asset class, because that to me will be the we have arrived moment, I guess, for everyone in the niche. And to go back to something you were mentioning earlier, Dan, with like Coinbase's acquisition of Deribit, like say they transition to US dollar denominated deposits, do you think that will widen the accessibility? Because the reason I harped on the BTC ETH deposits was not just volatility amplification, but also to show like, okay, it's kind of a standalone asset class from the standpoint of like, if you're trading crude oil on CME as an example, or crude oil futures and futures options, it's not like the underlying is denominated in crude oil. So you think that's actually been an inhibitor versus being like an incentive.
Yeah, I mean, like you're not going to take physical delivery of crude oil, right? Like,
Yeah, no,
yeah.
I know. Yeah.
So no, I do think it's been an inhibitor. I think like number one, you could never get access in the States to any of that. So Deribit was strictly a European, I think Europe and maybe some Asia. You would be able to, but you never had access to that as in the States. You know what? A couple of years ago, Ledger X, yeah, it was called Ledger X, which was like
Who
FTX had,
acquired.
and yeah, and like that was the closest I saw to like smaller sized contracts. I guess like for me, it was always the size of the contract. Like, sure, it was the denominate. You know, you don't want to take like physical delivery of Bitcoin. You kind of want it cash settled. I think that's kind of what you're getting at is it makes it easier for retail pro-tail to access it when it's cash settled and dollar denominated. So I do think that's an inhibitor. You know, obviously, like the market wasn't as mature. So like even on Ledger X, like those markets weren't liquid enough to even support any of like what we think of as like traditional finance options. So like you could do like the pricing was all out of whack. Like there was very little liquidity. Like you weren't really able to do what we're familiar with as far as like highly liquid options. So yeah, I mean, I think that the regulation has to catch up, and I think Coinbase will be the leader in it. You know, Coinbase is kind of setting the regulation there. They already have most people who have heard of Coinbase. Most people, if they're going to open up an account, they probably do it at Coinbase. So just offering that at some point is going to, speed up the adoption. But yeah, like I don't think you would do like physically settled Bitcoin physically settled contracts for Bitcoin for retail traders. I think it would need to be cash settled and dollar denominated.
Did Ledger X offer both? I couldn't remember offhand.
I couldn't remember. I can't remember either. They might have originally done like physically settled and then maybe moved to cash, but yeah, they might have done both. You're right. I don't know. There was like I just remember the contract sizes were smaller, so it was like easier to like for me if I wanted to just as an individual get access to it. So I think like that's a big thing. That's why we don't see, quite frankly, that's why we don't see a lot of trading on the CME Bitcoin futures and ETH futures is because the contract sizes are so big.
Yeah, I think Nathan, to your point as well, as you mentioned that if we get like JP Morgan and these big institutions on board, that we will have made it. I feel very different about that. I think the whole point of DeFi is that we didn't want these participants, right? And now we're like, oh, we need liquidity, we need the institutions. I thought the goal was that we are our own banks and we don't want the institutions anywhere near our Bitcoin. But I think it's interesting to see how like everything has shifted and DeFi has changed so much. And I also use Coinbase the most, which is centralized, and it wasn't really like the purpose of why I got into DeFi or what decentralization is supposed to be all about. But it's interesting. I think we could talk about this all day long. We've already kind of gone over time, so I do want to keep it short because I know people have short attention spans nowadays with all the perp trading and all the meme tweeting. But I do want to ask if you guys think there are any products or hypes at the moment that are totally overrated and that just need to go. I want to get one hot take from each of you.
You go first, Kevin.
All right. Personally, I've never been too into let's say the social fi like meme coin trading space. So I wouldn't say meme coin trading has to go, but I feel like there's too much of a push in that sense, and that could also be one of the things that's delaying institutions from coming into the space, because there's so much of a spotlight on these sort of extremely high volatility and high risk matters. I think that the thing that we should be focusing on is definitely building the infrastructure in DeFi further, options being one of them. And not only that, but bridging options with other sectors of DeFi. So, for example, a big thing, which is one of the things we're working on with PokPok, is AI trading. So, AI agents has become like a very, very big narrative in crypto, especially around like automatic trading or just interacting with the blockchain with an agent. So I think it's a very good idea to build infrastructure, like for example with Panoptic or with PokPok, where we can actually integrate with AI agents, and it just adds so much more distribution, and it connects the rest of DeFi with individual protocols, so we can just all interact with each other. I feel like that's kind of the utopia for DeFi, preventing it from being too, how would I say, dispersed. And it's good to make everything interconnected and interoperable.
Yeah, I mean, I think this idea of like tokenize everything and this like I don't know, these like launch pad kind of it's similar to the perp platforms, right? It's like there's a couple that do it really well, and then everybody hops on because there's a easy way to raise money and basically make $1 billion quickly. I think like we've saturated the market with like this tokenize everything, financialize everything, gamblify. And I understand speculation is what we need. Speculation is what how adoption takes place. But it's just like I think we've saturated. At some point, we saturate the market with this stuff. And so I think like gamblify needs to be. I don't know that it needs to go, but it definitely needs to be like reined in. That there's this narrative that there's this narrative that like younger people, we're all relatively young here, like younger people have no opportunities, so the only way to make it is to gamble, and the way to do that is to buy the 50th version of a meme coin or something. So I think like gamblify needs to go.
Yeah, I agree. I think I was talking to yesterday to somebody about how everyone's launching L1s because that is the only way to really make money is by launching your own chain or your own token or these gamblified assets. And it's a shame, right? Because people need to pay their bills, so they do need to make money, but we need to figure out how to make everything more work together and interoperable. I agree. No more per platforms, please. Just stop.
No, the tokenize everything perspective too. I do like, because it's like, yeah, trade mortgages on chain because Lord knows it's never gone wrong off chain.
Yeah. I don't understand. I don't understand that. Like people they love the RWA thing, and I know that that's important. I know that like those are important things, but they don't excite me because it's like I don't know why I don't need access to that. You know what I mean? Like I want a simple way to, I don't know, get a mobile app and trade and hold and invest my crypto, right? I think stable coins are great, a great example of that.
I think it sets up some interesting scenarios like Paxos Gold, like maybe some more arbitrageable scenarios. That's why I mentioned like the Deribit coin denominated versus US dollar denominated deposits. Like when you have those inverse options, as I think they're called, with the coin denominated deposits, that sets up some very good ARB opportunities that you're not necessarily afforded in other asset classes. But yeah, like anything else, it runs to excess when you start when it's tokenized literally everything. It tends to it's just like the perp protocols. It's like, okay, let's milk every possible penny out of this that we can possibly get. You're going to oversaturate the audience.
Yeah.
Right.
Awesome. Okay, well, I think this is all the time that we have. Thank you so much, Dan and Kevin, for jumping on the first episode of our new Panoptic podcast. I'm so glad you guys were here. Hopefully, the audience enjoyed it and didn't get too tired. We were talking for a long time, but I think these topics are so interesting and very important to discuss. So I'm very grateful you guys came on, and yeah, I hope everybody has a great day.
Thank you so much, Rosalie and Nathan, for having me on. Thanks.
Yeah, thank you guys. I appreciate it. This was fun.